Hi everybody, I'm sergiok.kilembe from Trading Wall Street TV. Thanks for joining me for this week US market weekly reports. Okay, let's begin. First of all, the Dow Jones Industrial Average. What we can see, we had a bullish week. We are above the 4-week moving average. We're trying to go down towards the 8 weeks moving average. We rejected that level and we came up to close at 18,540 points. Now let's check out the diamond, the Dow Jones ETF, and we have the same scenario here. You know, indecision in the all-time highs. We trade in a range, intent to go down towards the 8-week moving average. We came up to close above the 4 weeks moving average. And then what we expect to see for the next week, we're trying to see more move towards the upside and targets the $188. Now let's move on, let's continue. Let's have a look at the Nasdaq Composite. The Nasdaq Composite, as we can see, at the all-time highs, resistance level. We have a bullish week above the 4 weeks moving average. The stochastic is in overbought region. We can see a convergence between the two moving averages of the stochastic oscillator. So what we expect for next week, we expect range movements, and if possible, we're going to trade higher. But as you can see, we are here in the resistance level, the resistance of this uptrend channel. So be cautious, you know, trade with a lot of precaution. Now let's move on, let's continue. Now let's have a look at the Nasdaq 100. And for the Nasdaq 100, as you can see, we break above the all-time highs of 4698, 4700, and now we are close to the 4800. Yeah, we had a bullish week, and we are at the channel's resistance level. Stochastic in overbought region with a convergence between the two moving averages of the oscillator. So we expect a range movement. Now let's continue. Let's have a look at the QQQ, the ETF, the Nasdaq ETF. And here we have something a little bit more interesting. What do we have? We have this kind of indecision candle with this long shadow over here. We try to break above the channel resistance, and we try to break above the 160, $117 mark, but we failed. We rejected that, and we came back under that level. So what we expect to see next week is more indecision and sideways movements, because we are, as you can see here, at the channel's resistance. And when we look at the stochastic, we are in overbought region. We already see a cross between the two moving averages, and then we're going back to the 80 mark of the oscillator. So we expect a sideways movement. Now let's have a look at the S&P 500. But first, as I like to do, we're gonna first go and check out the sectors map. As we can see, this is a weekly performance of each sectors of the S&P 500. And we can clearly see that technology had a good week. The financials had a good week. Consumer goods was a mixed week. Great week for Apple. Services, mixed week. Basic materials was a good week, but bad week for ExxonMobil, Chevron. The healthcare was a bad week for Johnson & Johnson, G&G, and Pfizer. And industrial goods had a mixed week. They go up between oil points something and 2%, and utilities a bad week. So now that's it for the sectors map. Now let's go back to the charts. Here we have the S&P 500. We have a bullish week, but with a lot of indecision. This candle over here, we can say that it's a hanging man. We are in all-time high, and what we can see, we clearly see that we had an opening at 2170 points, and then we trying to go lower towards the 8 weeks moving average. We rejected that level, and we came back to close higher at 8180 points. So for the next week, what we expect a little bit of pressure towards the upsides, towards the 2200s level mark. And as we can see here, the stochastic is in overbought region with a sideways movement. So maybe we're gonna go sideways over here. It's a zone of conflict, and we expect to see sideways movements. So be cautious. Now let's move on to the SPY, the spiders, the ETF. And here, same scenario. All-time highs, a hanging man over here. We can see that the volume is decreasing, so we expect a sideways movement. And maybe if we keep going higher, we can reach the target will be the 220 points. Now let's have a look at the VIX, the volatility index. Okay, here we are. We are here at the 11 points mark, still below the 8 week, the 4 week moving averages. We rejected the 8 week moving average. We are going lower, so as we can see, we are here in oversold region, moving sideways. So the markets will remain at the all-time high, but we expect the markets to go down for a little bit of correction. It's gonna be more healthy that way. So now let's have a look at the Russell 2000. Here we have the Russell 2000, and what we can see over here, we had that resistance over here at 1200 points. We break above, but with tiny candlesticks, very small candlesticks, not a lot of movement, not a lot of volume over here. So we're moving step by step. Now we are just under, we reached that level over here, the 1225, which was a support over here and here too. So now if we break higher above the 1240, the target would be the 1270 and 1285 as all-time high, as we can see here over here. So now we can reach those levels again. But take a look here. We have the stochastic in overbought region and convergence of the two moving averages. It's a sign of a sideways movement, you know, not a lot of volatility. Now let's have a look at the IWM, one of the Russell 2000 ETFs, and the same scenario over here. The resistance of 120, break above. Now we are at 122.50. It was a support zone. If we break higher towards the 124 and 125, we can go higher towards the 128 as all-time high for the Russell 2000. And now let's have a look at the bonds. First of all, we're gonna start with the T notes, the 10-year T notes. 10-year T notes yields. As we can see, we are at 1.59%. We are here in this downtrend trend line, in a bearish downtrend. As we can see, we had a bullish week, and with a close over here at 1.57% of the yield for the 10-year Treasury notes. And we are moving in this sideways pattern. We have over here a bullish reversal, and we can clearly see that we are forming a wedge and a triangle over here with this level over here serve as resistance. And if we break higher, and if we break this downtrend trend line resistance, we're going to move higher towards, first of all, the 1.7% of yield, and then go higher towards the 1.9%. So now let's have a look at a CFD, the 10-year Treasury bonds that we can trade. You can clearly see over here a bearish reversal, break below the 4-week and the 8-week moving average. We're moving towards the trend line support over here, right around the $130, and that wasn't, as you can see over here, that's a resistance zone, resistance, and now it's a support. So maybe we're gonna test that, and as you can see, we have that we have a triangle over here, like this and like this. So if we break below, we're gonna come back here at 130. If we break below 130, we're gonna go towards the 129. Okay, now let's have a look at the 30 years bonds yield. We are at 2.3%. We had a bullish week, a bullish reversal pattern, break above the 4 weeks and 8 weeks moving averages. Also, we formed here this ascendant wedge, this triangle. So now if we break above, we're going to go towards the 2.5% yield, and as you can see, that's a resistance and a past support, and now it's a resistance here at 2.52%. Now let's have a look at the 30-year Treasury bonds. We're gonna have a look at a CFD that we can trade. Here it is. As you can see, we had a bearish reversal candle. We are moving sideways, and if we break below, we're gonna go here towards the supports at 166, and maybe we can bounce from there and go higher, because as you can see, we have a pattern over here, like a step stairs pattern, you know. We go up, move sideways, a break, go up, move sideways, another break, go up, and now we are in this sideways phase. Okay, now let's have a look at the XY, the US dollar index. You can clearly see that the dollar is in a range, sideways movements between $93 of supports and $100 of resistance. We had that trend line, that bearish trend line over here, we break above, and now we are here at 97 points, and we are moving sideways. But what we can clearly see, you can clearly see that over here we have that uptrend channel, up like this and like this. So now we can clearly see the movement here. We're moving like bam, 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 an A, B, C, D, and now another A, B, a C, and maybe we're gonna go higher for a D. So we can move higher towards the 98. First of all, we have like a resistance over here at 97 points 50. So if we can go back to those levels, maybe we can reach the highs of $100 mark. Okay, now let's have a look at commodities. We're gonna first of all, let's have a look at crude oil. Okay, let me put it. Okay, that's it. As we can see, crude oil, we are forming a let me just put that out. Okay, like this. As you can see here with crude oil, we are forming a head and shoulder reversal, head and shoulder pattern. We can clearly see here we have the neckline. We are here forming the right shoulder. We have an intent of price of the price moving lower. We rejected that. We have over here, what do we have? We have over here a hammer at this resistance, at this support level. We have a hammer, so that's a sign of a reversal. So we have to look at the fundamentals of oil, but maybe now we're gonna go in an uptrend movement, no? So as you can see, we have an A, B, C, and maybe we're gonna go higher towards the $60 a barrel at this level of resistance over here. So maybe we're gonna enter that swing high for crude oil. Now we have the Brent oil, same pattern, same characteristics, same scenario. We have over here that you can clearly see here indecision. We are in an inside weak candle, and what we expect the prices to go higher, you know, towards the $66 a barrel, a past resistance level. But first of all, we have over here, we have a resistance at $50 a barrel, and another one over here at $55 a barrel. So we can clearly see that we are moving like in A, B, C, and D over here. Okay, now let's have a look at gold. Oh no, that's an ETF. I want gold. Here we are. Gold. Yes. Boom. What do we have here with gold? Gold, we have a bearish week, an inside weak candle. We are moving sideways. We're still above the 4 weeks and 8 weeks moving averages. So we're trying to break out of these sideways range movements now. So we expect, if prices go lower, if we go below the 8 weeks moving average, we're gonna go towards these levels over here of 1300s. That's a past resistance. Now it's gonna be a support, and here we can clearly see that we have this trend line over here that serves as a support region. So we can bounce over here and then boom, move higher towards the 1400s. Now let's have a look at silver. And for silver, we are in a bearish week. We can clearly see that there was a gap higher. We rejected the $20 mark, and we can clearly see that we were forming a tweezer top at this resistance level. If you can clearly see that there's a resistance over here at $21 and another one over here, and we have over here a support level, a past resistance, a support level right around the 18.50. So we can clearly see that if we move lower, we are already below the 4 weeks moving average, and if we break below the 8-week moving average, we can come here at this past resistance, now supports at the $18 mark over here, and also we can bounce here at this trend line support, this uptrend trend line support over here. So that's it for commodities. Now let's have a look at Bitcoin versus US dollar. Bitcoin versus the US dollar. As you can see, a great bearish week with a rejection of the 450 support level. It was a past resistance, now support. We reject that level and we are here, we close higher, and now what we are just below the $600 mark, but you can clearly see that we are forming a pattern over here. That's a cup and handle. So came from here, came down, moved sideways, up like A, B, C, and D. So that's the cup, and now we're forming the handle. So we're gonna go back, boom, right around maybe the 500 mark, and then we're gonna bounce from there and go higher. So I expect the Bitcoin to bounce over here, right around the zone of the 21-week MA, and then boom, go higher. As you can clearly see here, we're forming a triangle, and if we break above, then we're gonna go back to the highs of 720. Okay, that's it for the charts, and now we're gonna focus on the economic calendar for next week. On Monday, the 8th of August, what do we have in the US? Let's have a look at the US. At 4 p.m. we have the US Fed Labor Markets Conditions Index from July. On Tuesday, August the 9th, what do we have in the US? In the US at 2:30, we have the unit labor costs quarter on quarter for Q2 and the non-farm productivity quarter on quarter for Q2. Next, at 4 p.m., wholesale inventories month on month from July. On Wednesday, August the 10th, what do we have? Nothing of great importance. See, like at 4 p.m., we're gonna have some news: crude oil stocks exchange, the JOLTS job opening from June, monthly budget statement. On Thursday, August the 11th, what we're gonna have like at 2:30 p.m. we're gonna have the imports price month on month from July, initial jobless claims, exports price month on month from July, but nothing of great importance. At 7 p.m. we're gonna have the 30-year bond auction, and then on Friday, August the 12th, what we have from this day? Here we have two major data release at 2:30 p.m. we're going to have the retail sales month on month from July, and then the Michigan consumer sentiments from August. Okay, people. All right, that's it for this episode. Thanks for watching. Subscribe, share, comments, buy, and have a successful trading week. See you next week. Thank you.